GetCrack. Wake up, motherfucker.
Hello. Welcome to the show. It's January 28th, 2026. So short, quick update with what I saw today after all those earnings and Powell, okay? And, I don't know what's going on, really. Like, where does the market want to go? I don't think there was any decision made today after the Okay, so we had a lot of volatility after the market when we had earnings from Meta, so Facebook and Instagram, Tesla, and Microsoft. Overall, Microsoft went up while no, never mind. Microsoft went down. Actually, Microsoft went down and kept going down even after the conference call. And then Meta was temporarily going down and then shot back up. So there was a lot of confusion, I think. There was a lot of confusion of what people wanted to see. So if we zoom in here, so I'm going to go 10 minutes. You can see this right there, right after two of them was released. Tesla came later, but a lot of volume came in. It got pushed down this is the NASDAQ now. S&P, same thing. It was the same percentage, I think. It went down about 0.6% on the index level. So that's a lot. Okay, that's a lot for after hours. And then it got pushed right back up, recovered. So within these 10 minutes. And then Meta finally decided to go up. So it counteracted the Microsoft. And we've been moving up. And then Tesla came out, sort of went up a couple percentage points, but nothing big. Then LRCX came out, and it was kind of like, not much. But then after they had the conference call, it shot back up like 6%. So far, that's what happened in those 30 minutes. So we pulled back a bit, right? After hours closed, and then people just sold off the trade. But we're climbing back up overnight now. This is 8:30 my time, PM, and 30 minutes until Eastern midnight. So the Chinese market, Japanese market should be well in the open. And then later in 3 hours, the Europeans will come in, and we'll see what happens into pre-market tomorrow. So tomorrow we'll have Apple after the close. Okay, that's the only major thing that's going to really come out tomorrow is Apple. That I expect. That will shake up the tech and semiconductors. But judging by this candle here, and I can show you the S&P futures, the ES, same thing. You see that? But the NASDAQ is more pronounced, right? Because, Meta and Microsoft are really going to be bigger components of that along with Tesla. And so as long as we hold these levels here, so let's say 26,000. Okay, 26,000. It holds above there. Then possibly we just go higher. Okay, next week when we get the other earnings. So I'm not going to entertain any idea of trying to short this. I already got out in the morning of my SOXS. It already went down 5% at the open, and I was like, fuck this. It's already 5% below where I bought it, 5 to 7%. I'll come back later. Even though it's a small position, I could just hold it and wait till Friday to see if I want to add, because there's just better use of my money. Like Palantir was the one I decided to try to go short now, because right at open it did this, right below 162 on Palantir. So I said, I'll just trade it for this short. Maybe I'll do a lot better. So the rest of the day, even before Powell started talking, it just went right down. So, and it ended the day like this, okay, about right here at the lows. That's not good. I think, yeah, so 5%, okay. So, let me zoom out. So what you want to see is that when it touches 148, if it does this before the earnings on Monday after close is Palantir earnings. If it goes through here, I'll get out. Okay, I would be like, okay, that's just a quick trade. I don't know if I want to risk it on a Monday if the rest of the market pumps after Apple on Friday. Forget it. It'll have a follow through on Monday, I think. So Monday should be a February, right? Should be February. Yeah, February. So that'll be the first trading day of February. Okay. I'll see. I don't know how much I want to bet on it really through earnings. Because I'm hoping, like, if it cuts through 148, like, I don't know why it started moving down today, but I didn't even see any news, or at least I don't know anything. But, like, the way you look at this pattern here since August, it's just making this range, right? And it already tried to make a major high in November, and it made a lower high in December, and then we just been going down since New Year's. I mean, unless that earnings really does something to save it and recover so that it bounces off of 150 and goes back up to 200 again, I'm thinking this is just going to roll over. Like, there's a good chance these guys are selling into Monday because they know Monday isn't going to have a good earnings, and or they think like next week's earnings with Google and Amazon, so those will be the next two big boys, right? Aren't gonna recover, so they want to get out before next week. That's all we're waiting for next week. Is that or they're worried about the Japanese yen, right? Because we gotta talk about that. That's the only article I'll read today. I'll read something about the Japanese yen and the Chinese yuan, because we have to compare the two. Because Samantha Leduc, like I played 2 streams ago, was saying silver and gold are tracking Japanese yen, the yield, so the Japanese yield, the 10-year bonds, and so the JGBs, and then also look at how China is manipulating the currency. So how much stronger are they going to pump the Chinese yuan versus the dollar before giving up and letting it revert back? So those 3 things combined is what's causing, I think gold right now is up 2%. So something's about to happen. I just don't know which will collapse first. Is it tech? Is it silver? Is it gold? Is it something else? I don't know. So one of these things will break. So yeah, look at that. I gotta get out of my GDXU, I guess. I think it's gonna make another high tomorrow. So I'm in GDXU. I have some left. I'm gonna have to get out. SOXL, my leftovers, I have to get out. So those are only big longs I have right now. And then I have a whole bunch of other stuff that it's just long term, so I probably won't touch it. Like I told you last night, I had a whole bunch of old stock that I got when I worked from the optical stuff. So let's review some of that. Let's look at the Corning. Let's review some of that. Yeah, so the guy who was talking with me last night, he said he had this stock and was asking me what he should do when the earnings comes out, and I'm like, if it pumps, get out for sure. Like you should find out within the 30 minutes of opening, or you do it pre-market, right? So what happened pre-market was it was dumping in pre-market, so the earnings was not good enough to make it go any further, but it did recover right at the open. See, so you open here, and that's a nice candle, you would think so. But the next 2, so this 10 minutes, didn't get higher than the last high of yesterday. And so what happened was, sell off. This is not what you want to see. That means, like, there's a good chance, like, okay, it'll pop again tomorrow maybe and it'll sell off. But I think the other reason, too, is if you look at Amphenol is another optical. And I think that not only optical, also copper cable makers, okay, for data centers, for base stations, for your cell networks, and many other like things outside. Corning is just glass. They focus on glass, so that stuff is just glass. So it's kind of like very niche, So Specialized Glass. This one does the whole cable, so they'll probably buy parts from Corning. They'll buy parts from my company. So the company I used to work for would sell stuff to them. They would package it up. They would sell the whole cable to people. And so I didn't look at why it went down. Like, was there some earnings changes for the rest of the year? Is AI spending not going to contribute to this particular company? Is there something going on? Because I just rather wait for Microsoft and Meta to report their thing. But you could see, like, yeah, this thing probably helped make things worse for the people in the Corning. They probably didn't want to hold it at that point. So we'll see if this continues. Like, this is a major breakdown. So the trend is kind of broken now for this one. ASML also reported. This one is a European company, so it reported like really early, probably like just when I finished my stream, it already reported. But it was sort of trying to go up when pre-market opened 5%, but you can see it jumped up already at open and just went down. That's not what you want to see. So nobody wants to go buy this thing here at this price. Now RCX already reported. So we'll see how it acts tomorrow, because that's a competing company to ASML. Same equipment manufacturer for semiconductor fabrication. IBM did good though. I like IBM. Like, overall as a stock long term, like people really thought this is a boring company way back when, but you could see, like, so this is a weekly chart. So you could see way back since the great financial crisis, it went up pretty much immediately into April 2012. So this is when it stopped moving up and semiconductors took over. So IBM's been changing its thing to cloud, and what else? I think cloud is this major thing. I'm not sure how much AI it's been doing, but they switched off a bunch of CEOs in this time period here. So they went through some different CEOs throughout this period. And then in 2023, it started perking up again, and we broke out here in 2024. So it's been doing very well. Now, will it continue this trend up and I don't know, but it was up 7%. I don't know if this thing really will continue, if the NASDAQ pukes next week, but I will keep an eye on it to say, like, okay, is it a good time to say, okay, I'm gonna take a bigger position here and think IBM is really gonna continue up for the rest of the year? I might do that. I don't know. Depends on if the big cap's gonna go. Now, the other thing to notice today was, yesterday after the close, Seagate reported. Right at the open, it just shot up like a rocket, 20%. Now, these guys just do the standard discs, rotating magnetic discs. So if these guys did well, I guess they assume the flash guys will do even better with the SSDs and all that, USB thumb drives and DRAM. So those followed. Western Digital, which will report tomorrow after the close. SanDisk, which will report after the close. So SanDisk, Western Digital, okay, SNDK, WDC, and Apple. All those three are the ones I'll watch. I'm not gonna look at Visa or anything else. This is what will determine the market tomorrow, for sure. So SanDisk up 9.6%. They're all bubble territory right now here. If Apple doesn't do good, plus SanDisk and Western Digital don't guide well for the rest of the year to make them hold, this is just a pump right into a collapse. It will really make it easy for some of those semiconductors to fall over. Okay, and next week we'll have AMD. What else? NVIDIA will take a while to report. It's usually at the end of February, so it's not going to be right away. So all we got next week is pretty much AMD and maybe some other important ones. But most of the important semiconductors would have already been done this week, okay? Especially with Apple. Apple has a big influence on semiconductor companies because they require huge supplies for their iPhones, which will dictate things for what are the popular little semiconductor companies like Analog Devices and other things. Which is the other ones? And I forgot all of them now. On Semi is another one. NXPI, another one. Yeah, those little ones probably will report next week. But AMD is the big one to watch. So which one is this one? Tuesday, February 3rd. Okay, that'll be the next big one after all these guys. Okay, anything else? No, I'm not gonna talk about any of that. Next thing, Chevron. Chevron will report Friday. Friday, be big. Oil has been going up steadily. Today there was a report on gasoline and oil. Every week there's updated reports on gasoline, oil, diesel consumption in the USA every Wednesday. So far oil's been perking up, and Chevron has announced that it will up the Venezuelan oil exports to the US to 300,000 barrels. So we got that. So Chevron and Exxon will report on Friday. We'll see how this plays out. So far this year, doing good. So does that mean I want to increase exposure and buy a leverage ETF? So if you want to increase your exposure, this is how you do it. You can buy UwU. UwU is 3x leverage of XOP. Okay, XOP is oil exploration ETF. So you use this one. Every time you go up some percentage, multiply that by 3. So let's say XOP will go back up to where it used to be. So it still hasn't gotten to the high before COVID or after COVID. So, okay, whatever. Let's say this is the area, like 171. And so at the very least, it will try to get back up here. So what's that? 24.85%. Okay, and I buy UwU. Okay, that means like 75% basically. So I can go up here to 54, from 30 to 54. And if we break that and go higher the rest of the year, oil really perks up. And yeah, you can expect a lot better, right? You can, like, maybe you can go up 200%. So if you're really aggressive, then that's what I would be doing right now. So first off, I'll see some small cap oil stocks, oil transportation, refineries, any of those little guys. Put those in the portfolio, and then when I really want to be bullish, I add this one, UwU, and just ride it up. That's what I did for the gold miners, right? So I have a little portfolio of gold miners, little stocks. But if I believe there's a good trend, like what happened starting July, then I'm going to, every time I start selling off my individual shares of individual companies, I trade it in for GDXU. And when they have a big dip like this, right, in November, and it's holding, then I buy even more and more, so that when it does its last big leg up, like it's doing now, then I'm mostly just, or all completely in just GDXU, because then I can get this last big push up here, so I can make 185% so far, okay, around that much, 200%, instead of just like relying on, let's say, a silver miner like this one, EXK around that same period only made about what, 85 or 86%. And if I just did straight silver, let's see, comparatively, how much better would I have been doing? Yeah, still can't beat that. See, that's 117%. So still doesn't beat the 180%. So that's something you think about when you have a good trend and you see a big breakout, because these are commodities. They're very dangerous. I don't say like, oh yeah, you can buy them at any time. No, if it's going sideways like this, like silver and gold, I don't buy that stuff. I don't touch that stuff. But when you start seeing the trend, commodities always act like this. They always have a big fat push up, you know, and if you think it's coming, then you do it. You follow that trend up. And oil's probably going to do the same thing this year. So oil will be what silver was last year and gold was last year. So oil's going to do catch up, right? It's going to catch up with copper and all that. Not this one. Come on. So WTI. So that's just a recommendation. You know, if you want to increase your exposure, that's how I would do it. So this has been going sideways for a long time, right? Really long time, since Ukraine and all that. It's been going down to sideways. So very slow and steady downtrend here. And eventually it will say pop, and it'll start shooting up, and you can't control it. It's just out of control. So they'll have it, the OPEC or whatever. There's a war. I don't know what will make it happen, but it's time to go. Somebody here is buying this up. They know something. And once this commodity moves, this is where we want to be. So this will be the gold and silver of this year. Let's see if that's true. So that's what I would play. Okay. OILU. OILU. All right. Anything else? I think GEV reported earnings. Nothing too much. So, but nuclear is doing well. I think I heard some news on UwU Energy Fuels. It had some news. It popped. But still, it's violent, right? This stuff is very violent. It could just collapse next week. I don't know, with the uranium stuff here. But these are one of those places where you can try to get huge gains if you were a risk taker. If you're a young person, then yeah. So if, let's say you bought it in the April lows, this is like 500, 600. This small, I think this is small cap or something. It's definitely a high beta. I think another one is LEU now. This one didn't do as good as that one. Yeah, UwU is crazy. What else? There's some others. We'll talk about uranium some other time. We'll have to have a whole show on uranium stocks. But I gotta see how silver affects it, because if silver and gold slow down or drag down, then copper and the other guys will probably have the issues too. So I'll have to wait and see. I wouldn't be buying this thing right here, but it does look good. I mean, the chart does look good. I mean, when you have a big move up, retest of this moving average, the two moving averages weekly here are moving up 40 and 18, and then you see this bounce up, then yeah, I think it wants to go higher. Let's see what the overall uranium. So this is uranium miners ETF. Yeah, this one already broke out. Okay, so I think we talked about this 2 days ago, or 2 streams ago, I mean. And then let's look at the miners, junior miners, so smaller ones. URJ. Okay, let's see how much. Yeah, this one's a lot stronger, a lot more beta here. So that's 3 weeks already. Broke out that, and it already broke out end of December. Okay, good. Yeah. Okay. Well, have to see. So far, uranium's the golden one. See how the lithium miners are doing. I think this one's still dragging out. Yeah, not as good, because this week has not been a good week. Looks like we're gonna have a red candle there. But yeah, lithium and uranium, gonna be looking at both of them for sure. We'll have to see if we're gonna increase exposure in those areas once we move out of all the tech stuff. Get out. Now let's look at the ETS for tech. So this is before those earnings. Okay, so this is what we're gonna look for. So we've been dropping since October into this area here. So IGV is tech software sector. It has a good mix of software companies, and we got 96. Okay, on this area. So you can see this area of the NASDAQ is not helping, right? The other one is communications. So this is Dow Jones Communications. This one, no, not helping, but it did bounce off of 254. So it's trying to get back up here. But as you can see, the only reason the NASDAQ really has been going up is SOXS, the semiconductors. That's it for 3 weeks now into the year for, I guess this is going to be our fourth week, we've been doing very well. Okay, as a reminder, how well? 15%, 16%. So that's a lot for an index. Okay, that's a lot for 1 month. So that's 1 month's performance. For if you have the S&P 500 and you got 10% over 1 year, that's an amazing performance. That's pretty much what you expect from the S&P 500. And this thing already has done 15 to 16% in 1 month. Now, do you expect it to continue on next month? Another 15%? And March? Another 15%? No, I doubt it. So when this thing does eventually decide, I want to go back down, guess what? S&P ain't gonna be happy, because that's pretty much what's trying to keep it from reverting. It's like, yeah, I'm up like 0.9% this week, but 0.9% for the S&P 500 is probably was 6% SOSXX, right? So it's all that Micron, the SanDisk, those guys. It's not any of the other ones. Like Microsoft ain't gonna help. Microsoft's down like 6% overnight trading right now, probably. Meta is up like 7%, so they cancel each other out practically. Tesla only up like a couple percent. LRCX, that's 7%, so that's the one that's holding it up. The other two cancel each other out, whatever. So we gotta wait for Apple then on Thursday. That's gonna be the big one. All right, anything else? No. Let me see what the yen's doing overnight. So this is the Japan government bonds, the JGBs, 10-year. So people are not liking the fact that it's been trying to get to 2.4%. It's been holding, okay, steady, but we'll have to see what it does. Here is the Chinese yuan. So you can see that it's been dropping a lot since April of last year. This is where the tariffs started, right? And the Chinese were like, well, let's intervene. Looks like Trump is going to put 200% tariffs on us. So we're just going to boost our yuan. So when this thing is going down, USD to Chinese yuan, that means they are increasing the strength of their currency versus ours. Now, the other thing is Japan. Japan doesn't want a strong yen. So this is causing them inflation that they don't want. So they're trying to push this thing down. So right now, the Japanese want this thing to go down. The Chinese want this thing to go down. And eventually it'll break something. And we got the Japanese yields going up because of political issues. Now, okay, with their president. Okay, so whatever. Something's going to break. Something's going to break. I don't know what. All right, so let's read an article about that. So let's transition to the articles. Close the chart out. I don't see this anymore. Okay. And then, okay, 30 minutes. That's good. And we can end the show. Full screen. Let's see. Okay. All right, this one article here, I'm going to read to you guys. Let's change the music from the X-Files. So, Death of the Bond Market, a 4-part movement. So this is from Russell Clark. Russell Clark loves gold, hates bonds. That's his macro thesis. It's like you should be long gold for the next decade and short U.S. bonds for the next decade, okay? The market is screaming capex and growth, and bond investors are pricing a world that no longer exists. So this is an interesting... I find this guy pretty interesting. I'm not going to say like, oh, he's going to be right or anything, but this is going to be something that the people that think America is going to collapse are going to like, this thesis right here. I am generally an upbeat guy, but this morning I woke up and felt down for some reason. When I feel down, I don't try and cheer myself up. I lean into it. I wallow until I hate it so much. I drive myself to live again. Okay, I don't know why he started with this paragraph. I feel like writing about death and loss, so I shall write on bonds. And as I write and wallow, I shall listen to sad songs. First up is Richter on the Nature of Daylight. Oh, I know that song. That's from like that movie Arrival. They use that piece on there. I should note my downbeat mood does not come from markets or my strategy. Gold to bonds, TLT is the ETF for bonds, has been wonderful. If you have not looked at gold to TLT, 30-year U.S. Treasuries, okay, specifically those bonds, I provide a long-term graph here. Okay, so this is a ratio of gold to bonds. So gold has been outperforming bonds a lot, okay, since COVID, for sure. The question I think everyone wants the answer to is why has the sell-off in JGBs, we just mentioned that, so those are the Japanese government bonds, yields, not had a greater effect on the US? So why have all the yen stuff, the yen drama, and the bond drama not affected US markets yet? I look at this graph and ponder this myself. I have now changed music to It's Quiet Uptown from Hamilton. Oh my God. Okay, anyway. SPY dividend yield versus 10-year JGB. So this is the graph of, like, let's say you bought the SPY, okay, ETF, or you just individually bought a lot of large cap companies with dividends on them. So if you buy a bunch of stocks that give you dividends, like they give you a few pennies every quarter or every 2 quarters or every year, something like that, the yield on those dividends right now do not beat Japanese bonds. And remember, Japanese bonds used to be the lowest paying yield bonds. Okay, nobody wants to own those bonds because they suck. What happens is they go and buy the yen, okay, they want to basically be a lender in there. They get the yen so that they can get the cheap yen, because if I get a loan from a bank in yen, I pay them a very low interest. So that's basically why you don't want to buy a bond from Japan, because they will pay you low interest. I don't want to be a buyer of those bonds. I want to buy the yen or get loaned the yen. I mean, well, I guess, yeah, I'm not using buy and sell right here, but you get what I mean, right? Like go to a Japanese bank and I want a loan. I have to pay a low interest rate because it's set really low. So, and I don't want to buy their bonds from the government because their government, the Japanese government, will pay me a low interest rate. So right now it's not happening like that anymore. So it's been rising and rising and rising, and now it's paying a higher interest rate than if you just bought like a bunch of US stocks and got a dividend from them. So if you got a dividend from a stock, you can look at the yield too. So stocks do give you something like interest, and it's in the form of dividends, and you can compute their yield. We did that like in some stream last year when I was doing a lot of those streams, and I taught you how to like get a stock with the price and then figure out the yield from the dividend. So if they gave you 5 pennies every quarter, you can compute based on the price you bought that stock, what is the quote unquote yield of that. Okay. Now, if you see the orange line at the left, right, January of 1994, I guess this is where it starts at. So in the 90s, Japanese bonds were paying pretty good interest rate, and then all of a sudden crapped out in the early aughts, going right into the teens here, 2010s, really low, really cheap. Okay, so nobody wanted this junk, nobody wanted these bonds. I do have some thoughts on this. When I look at the gold to TLT graph, so the gold to US 30-year, there are 3 distinct periods of gold outperformance: the 1970s, the 2000s, and now. For me, the 1970s and now are pretty easy to explain. US and global government was pro-labor, which was an era of rising wages and costs. good for gold, but bad for bonds. The problem is that 2000 to 2010 was the golden age of globalization, and yet gold outperformed treasuries. My first thought was that this was driven purely by rising Asian wages or weak US dollar, different sides of the same coin. We can use the Chinese yuan as a proxy for Asia in this case. So this is what Samantha was saying in that video, but she didn't get into the reason. So this is the reason. The problem with this analysis is that the Chinese yuan has been weak, and so have most other Asian currencies. Korean won, Indian rupee, Japanese yen are either at all-time lows or decade lows against the US dollar. Or in other words, if you showed me how well gold to bonds has done, I would have assumed the US dollar would be in the toilet, but it's not. I have changed the music to Merry Christmas, Mr. Lord. Oh man, I know that song too. Oh, this guy. All right. It's a sign my mood is lifting. I spent most of COVID learning to play this. Oh, great. Yeah, he played in the piano now. In fact, as predicted many times, long yen has become the new widowmaker trade. Bonds and currencies have changed. But why? Oh, man, you got to do proofreading. But why and how? So what's this? Japanese to what? BGN? Man, I don't know what this is. Okay, let me read the paragraph, see what this is. I think the simple answer is the market is signaling lack of investment everywhere. For a world where the U.S. is not willing to play peacemaker, everyone now has to beef up defense. Oh, that's true. I did hear that Norway is buying more anti-aircraft missile batteries or something like that. Ukraine is also selling data from their drones to AI companies. So yeah, there's going to be a lot of good things for defense companies. So we'll have to look back at that again, because I talked about some of the European ones, which were really good. So I'll have to revisit and see how they've been doing this month in the weekend. And then maybe we'll have another show on it next week. Okay, so, and secure supply chains. The deflationary influence of technology has looked to have ended, which I blame not on Moore's law. So I think I'll leave you guys to Wikipedia that. Moore's law is basically the rate that semiconductors shrink every 2 years. I think they go down by 2 times every 2 years. I forgot. But on the relentless consolidation of tech companies and the relentless focus on returning capital to shareholders through share buybacks. For the US, which had for years outsourced manufacturing to emerging markets, this made sense. But as we can see, raising equity from the stock market is beginning to return to the S&P 500. However, we are still a long way from what we saw in the 2000s. Shares outstanding. Man, I don't know why didn't you explain what this is? What the heck is what is BGN? Oh my god. Okay, let me look it up. BGN. What currency is that? Bulgarian? So why is he looking at the yen versus Bulgarian levs? Okay, I have no clue. Guys. I don't think anything was explained in the paragraphs before and after that. Okay, whatever. Okay, shares outstanding at S&P 500. Okay, all right. Japan, which has tried to maintain a manufacturing base, also has been focusing more on shareholder return in recent years than investing. As we can see from the now falling share count of the topics. So, okay. So the shares of the S&P 500 is starting to rise, and this one is falling. What is so interesting about this graph is it's that 30-year JGBs, the Japanese government bonds, also bottom as shares outstanding started to fall. Okay, so this is okay, and at the same time the yen became reliably weak. Okay, and what's the thesis here? Everywhere I look in the Western world, the markets are crying out for more investment and sending price signals to encourage this investment, and yet corporates demur. There is only one country that has maintained investment necessary for the modern world, China. It has developed its military and spent to develop its tech industry and avoided the consolidation we see in US tech. This probably explains why the Chinese bond market is closer to lows than highs. Okay. The Chinese never really caught the buyback bug. Okay, so we have increasing shares. So he's saying that, all right, so for the most part, the U.S. companies have been buying back their stock, okay, inflating the prices. And what he's saying, the Japanese have been starting to do the same thing. And then what? Okay, China's not doing that. All right, okay. Why are bond yields rising? Because corporate investment now lags behind needs greatly, leading to surging prices. And this also explains the move in gold to bonds we saw from 2000 to 2010. At the time, we had underinvested for the needs of an industrializing China. Now we're underinvesting for a period of military and technological confrontation. Equities understand this. Bond investors are deluding themselves. So he's saying the bond guys are stupid? You know, bond people usually should be smarter than the stock guys. So equities. So I don't know. All right, if you believe this, yeah, if you're a bond investor, most of them are billionaires, man. That just like that nice coupon. So you're telling me that the bond guys are gonna make a mistake. All right, okay, that's interesting. So the gold guys are right, the bond guys are wrong. So gold people now are smarter than bond people. Okay, that's going to be an interesting thesis too. So all those what's that bond? I mean, gold shill. That guy who always goes on TV, is shilling gold and stuff. Like Peter Schiff. All right, that guy. That small hat. Right, there we go. Yeah, that dude. So that guy's going to be right eventually. Okay, this will be interesting to see. All right, the really bad news for bond investors is the longer corporates keep capex low and prices high, the greater the catch back in wages and inflation will be. I still target 10% on the US 30-year Treasury. Wow. That is huge. That means the bond. Oh, man. Okay, so the US 30-year is going to crash real bad if it gets to 10. I can't believe that. If it does happen, okay, you know, we're going to be in a new world order for sure. And I'm guessing if that does happen, it will be around 2030 to 2035. That'll be the years I will be watching for that. Some kind of big war will happen then. As I finish writing this note, or, you know, I don't know, that people would usually run to like bonds eventually, unless they believe the U.S. is going to lose that war. So initially, if you have a war kick up, gold will definitely shoot up first. Then people will buy bonds because they want to support their country, buy war bonds and all the other kind of bonds. If they don't buy those bonds, that means they believe the U.S. is going to lose the war, right? So they're not going to buy U.S. bonds. Now, maybe they'll buy the Chinese bonds then if we're fighting China. I don't know. Whatever, something like that. As I finish writing this note, I am listening to Skyfall by Adele. Oh, yeah, great. The lyrics are strangely apposite. Wait, is that a word? For a song about bond. This is the end. Hold your breath and count to 10. Okay, yeah, right. I think there's some comments down here. I'm not going to read those. But yeah, the link is in the description. Maybe you can read the comments. Maybe somebody will say, like, you're an idiot. This is stupid, blah, blah, blah. Usually that happens. But there you go. Okay, now I'm going to play one video and we'll end it here. This video is from the Wyckoff guys. Short clip, okay? Just a minute. And it's going to show how we might pump pretty good. So if we start moving up, watch that 7,000 area and then the 7,300. If we break both of those next quarter, then we're going to have a repeat of something that happened in 2019. Okay, so this is what the analog is. All right. Okay, let me find it. Did I download it? Yeah, I downloaded it.
I think this is probably the middle of the way. Usually, when we have a very strong move up like this, you're going to have some kind of consolidation. And then there is some kind of continuation which matches somewhat in distance, but changes in character. It could be over lesser distance as well. There could be some kind of contraction into like 61.8, whatever the fib number you want to use there. So you could do this. A good example of that, which I've been showing you guys multiple times, is 2019. If anything, I think that structurally, we are probably at the same type of junction somewhere here. What are we seeing? This presence of the demand at the same level of the consolidation. We're seeing the same volume spikes on the background of pretty strong movement to the upside. And look how we're stuck. Now, currently, we are stronger. We had something like this, and then this and this, and now we're here. So all of these points were very kind of like crucial. Well, here is one, here is that second one, or maybe like this two belongs to this because they're creating a higher low, and see how there is a structure of higher lows here as well. Something akin to what we have here as a continuation, therefore somewhere close to a distance that we've traveled before.
Okay. Now, you remember what I said yesterday? What did I say yesterday? I said there's going to be a big volatility because I showed you the Bollinger Band thing, okay? All right. So let me show you that. But it doesn't guarantee you something. It doesn't guarantee that I know it's going to move like that, though. All right. So let's go. Let's go. And let me refresh your memory what I said yesterday. Okay, this is from, let me share it. Okay, here. So the last time the Bollinger Band width was this low was when? 2019. And at that time, we went up right into COVID and crashed. So are we just going to pump and then dump? Or are we just going to dump and then pump? So it doesn't guarantee that it's going to be like 2019, but it's going to do something, right? It's going to be a pump and dump or a dump and pump. That's the problem. I don't know. I can't tell right now. I got to wait for Apple and SanDisk and Micron and NVIDIA to report now. Shoot, Powell didn't give us anything. Powell didn't talk about anything in the conference. Okay? He spent most of the time talking about Trump. It was like, Trump can't do this, Trump can't do that, la, 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 la. It was like, nobody cares. Nobody cares. Can you just tell us anything? Probably not. Probably because he knows he's going to get fired in May. He's going to get replaced. So it doesn't matter what he says. Nobody's going to care what he says anyway, because they're like, yeah, you can say that, but you're going to be gone in a couple months, right? You're going to be gone pretty much in a couple months. He only has 2 more meetings. So who cares what he says? So he probably didn't want to bother. He just wanted to talk shit about Trump for his conference call. So that's why nothing happened today. Boring. Whatever. Anyway, Ditto, I probably should catch up on the streams at the top of the new year. Yeah. I probably should. I probably need to edit stuff. Like when there's a consistent theme, I'll edit it. But the real thing, important thing is I need to take my list of stocks and start doing the Substack when I start my portfolios. Okay, so I'm gonna start some test portfolios, put them into Trading View, so I'm gonna paper trade my quote unquote model portfolios, and you can pick and choose which portfolio you like and see how they run. So for the rest of the year, I'm gonna test them out, see which strategies do well. So this is what quote unquote professional hedge funds or whatever that's just why I don't like this, because this requires actual work. I'm a lazy guy. I just go like, oh, hey, look at that. I'll just buy a ton of this thing, or like I'll move it over here, and it's just like willy-nilly. But when you're running a professional firm or you want to advise people professionally, you need to have actual systems and systematics and tell them how you're doing things and take into account risk, all that stuff, which means I have to do more work. Okay, but we'll get there. We'll get there. All right, guys, we're done here. Almost an hour. All right, thank you for watching, Garion, Eric W. See ya. I don't know what Jeremy's gonna do. Looks like he's driving somewhere overnight. He'll reach some destination. Oh Lord. If only you learn how to invest and trade stocks, you wouldn't be in the situations you are in. You know, hell, you could have simply just bought a ton of gold some way back when, but no, whatever. Whatever. We'll have to see. We'll have to see how this year is going to go. It looks like this year is going to be the year of the oil. I'm going to buy some oil, okay? Buy some barrels of oil. All right. Maybe I'll come back Friday. I don't know if there's going to be anything interesting before Apple does its earnings. Probably nothing. Nothing to talk about tomorrow. Except for like watching what Meta does. Meta, Microsoft, Tesla, and semiconductors, see what happens. But I'm looking at Palantir to increase my shorts there. Looks like that's the only one that will really care. I think I saw Bitcoin start going down overnight too. So maybe I should really just consider shorting Bitcoin again with MSTR. I don't know. I'll see. All right. Later, folks. Good night.